trading oil and perhaps are worried about what it's going to do, where it's going to go. You had your large peak up here, you had your fall, okay, it brought you down here. You then had it long on a bounce in line with key support. Okay, you had a really key technical zone over here, and that provided you with a bounce to the upside. You've now fallen back to areas of minor previous support. You've come up a bit. So it's rejected the idea that gold is just going to fall and fall and fall and fall and fall forever. In fact, that was a very large green candle there. Okay, so buy side impetus in line with minor support, which you can see again, like I said before, to the left, here. You can see that there. So at this point, you've had a calming in the downside sentiment, but I wouldn't be shocked because of the overall market sentiment ruling the move. I wouldn't be shocked if you do get nearer 77.63. Then you've got the opportunity to very lightly short it. Okay, and the reason why I say very lightly is because if you draw a fib, your fib is only going to take you to the 23.6% area. So a very, very minor move back up. It's not far at all. That is why you shouldn't go crazy. Because if it keeps going up and the sentiment changes and it goes, wow, oil's going to explode to the upside, you will be roasted out. Okay? You don't want that, believe me. So early shorts are okay at this point. And further scalings, if you are a risk averse trader, I would rather just keep it short at this point. You've got an amalgamation of key moving averages, which is really handy. You're pulling up on what is now a nearer term downtrend. Okay, and the market sentiment on the face of it now is with you at that point because basically the worry with oil is the US is producing lots of it, China doesn't want it, and that's what's pulled the price down. It's a panic. But if you find, like you found before, that market sentiment ticks up and they go, wow, oil is going to go mad, you know, you can get exactly the opposite. So just be cautious trading oil. It's heavily sentiment driven. If you get on the wrong side of it, it really is not pretty. Okay. So if you're someone who is newer, I would just hold off. $82 area, probably going to be okay. You've got a few areas of, I'm just going to move this over here for a minute. You've got a few areas of key resistance over here. Okay, so that would provide you a bit of assistance in trading it. Now, if you wanted it long, I'm not going to use my weekly for this. I did mention it long. I probably wouldn't rebuy it down here. Okay, or if you're going to, it's going to be very, very light. You do have a lot of this down here. You've already seen the price fly away at this point. So I would say that's probably a risk averse long zone, but I wouldn't be shocked if you break under that. You've hit it very many times, but it's been a while. So if you do get a bounce around 68 bucks, wouldn't shock me. I think overall, if you're a risk averse trader or you're looking for long-term investor entries, in other words, you'll just want to buy and just hold it for a while, I would say the next best point, in my opinion, is nearer your $66. It comes around this point because it's very contentious. You have got your key 200 MA rising, this one here. Okay, that's really handy for tech longs or longs on a technical basis, that's what I mean. And it comes in line with these areas of key support to the left hand side. Okay, there's a lot of it at this point. I think that's a fair price for oil given the previous price trajectory. It would reflect what would become a newfound downtrend because it would beat that previous low. And often if you beat previous lows into a new level of key support, okay, you then get your further bounce. That's what creates a downtrend over time. It's exactly that. Beating highs or beating lows in a downtrend, beating highs in an uptrend. So a bit like this is what I'm saying. You may find it's like that, potentially. Okay, and then maybe like this, and then like this. I wouldn't be shocked if something like that occurs. A little bounce, bumps in the road, slowly making those lower lows, you know, like it has sort of here and in various times in history. So just be very wary and very careful of that. I wouldn't be shocked if you do get down to $60. So don't get long on oil and go absolutely crazy. The sentiment at the moment is pulling it down. Whether or not that changes is largely yet to be seen, and we'll just have to wait for it. But next level of shorts here, I would say that's ideal for hedge shorts as well. You're well in line with those key MAs pulling it down. And if you get a softening in geopolitical tensions, of course, it's going to be far more viable short because chances of it flying up away from you decrease significantly, obviously, because it's less likely people are going to panic buy oil because they think there's going to be embargoes or there's going to be tightening on its supply. So that is that. That's oil. And as I said, I'm going to re-upload this, so don't forget to get my free training underneath. I'm going to just